We've obviously seen commodities, obviously, fall quite very much, over the last 2 years, from 2014. We had an oil price of around 100 in January 2014, obviously to 30 around January 2016 as we speak, and, playing around that. Those levels. I think when you look at the markets, in terms of how have they been affected, I think investors have started to look at the fundamentals again. You know what I mean? A lot of the better credits in Africa before the commodity slide were actually the oil producers, but obviously that has shifted because a lot of these countries are the ones that are facing challenges, in terms of their policy responses, you know what I mean? So you look at Nigeria, the policy response hasn't been that great, honestly, especially around capital controls, FX regime and all that. But also the use of monetary policy to try and sort out what is effectively a structural problem, you know what I mean? I think investors have been looking at some kind of fiscal direction since the Buhari administration took over. So there are definitely challenges there, but there are also opportunities. I don't think it's doom and gloom. Obviously in East Africa, things have been a lot better. So we've seen fiscal consolidation, better articulation of policies, especially fiscal policy, and actual investments, so the government has actually said what they will do, you know what I mean, as opposed to just playing lip service to it. So in in Kenya, you could mention the railway that they're building, the Mombasa port, so these are all projects that can actually unlock a lot of growth in the country. If you look at the East African region, growth is anything between 6 to 8%. Nigeria, 2015, we're looking at around 2.5, 2 at best. So that just tells you the story in that one figure. Obviously, for us, we've always looked at Africa in terms of two universes. There's the hard currency universe, which is the Eurobond space, and we're obviously talking about listed debt here, and the local currency space. Now, the local currency space has not been a place where you want to be, if we're going to be honest, about over the last 2 years, whether it's Nigeria or Ghana. Ghana has always had its liquidity problems, but Nigeria, liquidity hasn't been an issue. But what you used to find in Nigeria were better yields, or at least attractive yields, And in some cases, not that it really matters for a foreign investor, but we're actually talking about positive real yields. Now, when you move to the Eurobond space, obviously, Ivory Coast has really been a good story to tell. You know what I mean? The government has come in. It has done everything to the letter and spirit of what they say they were going to do, and that reflects even in the pricing of the Ivory Coast curve. It's a very rich curve. Investors like to hold Ivory Coast. And also from an FX point of view, whilst the rest of Africa has been struggling, obviously with Ivory Coast, you've got the CFA franc with the Euro peg, so that has also helped. Senegal, in the same light, it's one of those countries where, perennially inflation has been below 3%, so again, from an FX story, there's no real pressures there. It has been a nice steady build-up of investments into the system, and obviously no blow-ups, even from a political point of view. When you look at 2015, at the beginning, I remember, at a conference similar to this one, or even this conference, people didn't expect a lot of the African countries to come and issue Eurobonds, But we all know what happened, We still got Eurobonds, even in what was arguably the most volatile period, not just for Africa, but also for emerging markets in general. We still had some debut Eurobond issuers, like Cameroon, for example. So it'll be very difficult for me to say what the pipeline is, but what I do know definitely is, obviously now, investors, there'll be a lot more cautious coming to the Eurobond market. I don't think we'll see the opportunity type of driven, issuance that we've seen. I think it will be more need basis. And on the other side, I think investors will ask a lot more questions, you know what I mean? If it's a country refinancing like we've already seen with Ghana and the World Bank guarantee, whether that was a good thing is a different story, because I think it distorts the Ghana international curve, if you like. pricing-wise and valuations, but that's a different story. But yeah, so I do expect, you know, obviously Nigeria has indicated that it might come to the Eurobond space. Kenya has indicated that it might come. We could see Ghana, you know, they might come and issue another one. But definitely I think it will be interesting to see as these countries develop their international curves, you know, and for us, I think in Africa it's an exciting time because, you know, we're actually having international curves that are actually developing, and that will help in terms of pricing, you know, for the locals in the future. You know, obviously corporate issuance is not something that has always been talked about in the Eurobond space, but apart from Nigerian financial institutions and some corporates, the rest of Africa, we haven't really seen too much corporate issuance. I don't think that's going to change. Yeah. So I think a lot has been made about Africa overborrowing, can they afford to repay the debt and everything. I think people do forget that, you know, by any debt metric that you might want to use, I think we're just looking at the S&P presentation before, you know, in terms of actually fiscal debt. You know, it is a strong point for Africa, and the reason is debt to GDP levels remain fairly low. You know, now the ratio to watch is debt service payments as a ratio to revenues. You know, because that has been what has been ticking up. Obviously, revenues in Nigeria, because of low oil prices, have come under pressure. We are beginning to see Nigeria playing around the 30%, north of 30%, which isn't really the place where you want them to be. You know, Kenya is not too far from that. Ghana. So those are some of the countries where investors, I think, will be looking. I think that will be the ratio that investors will be more focused on, as opposed to debt to GDP, because Nigeria's debt to GDP doesn't really tell you the whole story. Its external debt is below 3% as a percentage of GDP. Total government debt is, below 13%. So it really doesn't tell you the whole story about. Having said that, we do expect, we do expect that, a lot of these countries, will start getting the policies right. I think that's the key here. Just as we've seen in East Africa, I think with Nigeria it's probably going to be a lot longer than anticipated. In terms of what we're seeing in Nigeria is really a watershed moment. It is really a time for the tough, if you like, choices. You know what I mean? Taking the medicine, if you like. Obviously that has been postponed for now, and it's been sort of like delayed. But which is, I'm talking about the devaluation of the FX here. But that is inevitable to have a functional FX currency. If you're going to achieve even a quarter of what they intend to achieve from a fiscal point of view.